Here we go. Okay. Well, everybody, tonight is January 21st, 2025, Tuesday night at 8:16 p.m. And we are on the call tonight, Triangle Blockchain Development. We have a special guest, Eric L. Moore, who will be giving us the updates on the latest on Sears. And we respectfully ask that if you have any questions, please hold the questions until after his presentation. And if you have any broker questions, please, not for this particular call. Without further ado, Eric, go right ahead, please. You have the floor.
Okay. How's everybody doing? Happy New Year. Happy New Year. All right. I'm not going to be here long tonight or this evening on the West Coast. I'm going to be quick. I'm going to run over a couple of quick updates that happened with Sears Holdings. We had a meeting. The last meeting was New Year's Eve, and I don't think I was clear on a couple of things because I did receive some emails and some texts, which are fine. And more importantly, I was on StockTwits, and I got some questions on StockTwits that I'm going to answer so we can put here, because sometimes the answers are a little too difficult, too long to put on somewhere like StockTwits. And I'm going to preface the information with this first. Adrian's going to pull up a document. I don't know how clear it is to everybody about what the process is, but the reason and somebody said something really interesting on StockTwits. They said, well, why didn't you just keep this for yourself? Why are you telling people about this great investment, so to speak, right? So I found out about Sears Holdings, as most of you know, when I wrote my first article. It was in August of 2016. Knew it was grossly undervalued, but I couldn't predict what the full direction of the company was going to be until much later. So the stock was $16.27. And when it reached 1 cent, I was still buying the stock. So when you understand the value of a company, your goal is to know the difference between the stock price and the actual value of the company. They may or may not be the same. The goal of a value investor is to find a stock that is trading for less than the actual value of the company. And I don't think it's clear to most people, and I'm not just talking to the people on this call, I'm talking 95% of the people who own stocks, that just because you can sell a stock for $100 and get $100 in a few seconds, that does not mean that is what that stock is worth. That is what that stock is trading for. When GameStop was $4.50 or $5, when Keith McGill, better known as Roaring Kitty, did his presentation, there was nobody paying attention to him. He had 3 or 4 comments, and 3 out of the 4 comments told him he was crazy. GameStop's going bankrupt. Nobody buys video games in stores anymore. And he actually went through like a 2-hour presentation where he went over the details and how much cash they had. He went over the actual value of GameStop at the time. And he said, even if they shut down all the stores, close everything, there's going to be, I think his number was $25, $30 a share left over. So you can actually invest in a company that might eventually close completely down, as long as what's left over and the money to pay off who's owed is a surplus. You can still make money on companies that close. Berkshire Hathaway, the most successful investment of all time, closed down. The actual textile mills that Warren Buffett bought in 1965, he closed them around 1980, 81. But what he built with the remains of that textile mill is one of the largest conglomerates in the history of the world. He built one of the top 10 fortunes of all time from a company that closed down and liquidated. There was another company that Berkshire Hathaway merged with around 1978. It was called Blue Chip Stamps. Blue Chip Stamps liquidated and closed down, merged into Berkshire Hathaway. That stock at the time, if you bought it and owned it today, $1 would be roughly $30,000 today. and the company completely closed down. And most of the people on this call might not even know what blue chip stamps was. You can Google blue chip stamps and you'll see what blue chip stamps were. There was another company called Diversified Retailing. Warren Buffett and Charlie Munger bought this company. They owned some department stores in, I think it was Baltimore, Maryland, some other places. They completely closed down. All they had left was some real estate. If you had invested in that company prior to the merger, it'd be somewhere around $20,000 for every $1 you put in. So every $5 would have been $100,000 in one generation. All companies that closed down and liquidated and merged up into another company. And they just continued to buy other companies that were profitable and undervalued. Very rarely has anybody duplicated what Warren Buffett is doing. Recently, Bill Ackman came out. He's a billionaire. He runs a hedge fund. He said he wants to build the next Berkshire Hathaway. Well, Berkshire Hathaway comes out of three companies that everybody knew were closing down, that everybody knew were liquidating, and he built one of the greatest fortunes of all time. So when you look at the best investments of all time, they don't just blow up. You take a look at Amazon, and matter of fact, I'm going to do this first. Adrian's going to pull up a slide, and I'm just going to give people a little bit of information on why you're getting so much negativity on Sears, and I'm going to show you what happens with all-time great investments. And this is my opinion. It's not investment advice. Everybody knows I'm not an attorney, I'm not a stockbroker, I'm not a CPA, I'm not an accountant, I'm not a financial advisor. But I'm going to give you my opinion and just give you an idea of why the great investments are missed. And a large part of why they are missed is because the crowd is never in the great investment until it's obvious that it was a great investment. The fear of missing out is what kicks in. People are talking about how much has already been made, and then they're looking to buy the stock. Because I get emails, I get calls. I get a lot of that with the popular stocks. Eric, what do you think about NVIDIA? Eric, what do you think about Tesla? Eric, what do you think about Bitcoin at 100,000? Eric, what do you think about, what's the other popular one? Plantar. And I always ask the question, how much is it worth and how much is it trading for? The challenge is, if everybody you're running into at the barbershop, the beauty salon, the music studio, the grocery store, if everybody is talking about it, it's probably overvalued, because you really want to be looking for what people are missing. And I think that is the hardest hurdle for most people. You're not looking for what's popular. And it's kind of counterintuitive, because you're generally in everything else, you're looking for what's popular, because that's probably going to be the winner. But we're the equivalent of a general manager at an NBA team. If LeBron James is coming out of high school this year, it's obvious that LeBron James is the number one pick. But you're also going to pay number one pick prices for LeBron James. You're going to have to mortgage your franchise, possibly trade all kinds of picks to trade up to get him. We're looking for the second round draft pick that's amazing that everybody missed. So we're not looking for a guy who's not as good or not a great player. We're looking for a great player that other people have missed. We're looking for Steph Curry. We're looking for Draymond Green. We're looking for the guy they call the Greek Freak, who nobody really knew much about. He played overseas. A few people knew about him. We're looking for the sleepers. We're not looking for what's already popular and hoping we can catch the wave and the stock just keeps going up. So the reason you don't see people get wealthy with the stock market, and the reason you've never run into a person and they're 35 years old or 40 years old and say, hey, I retired. I made 100 times my money on this stock about 5 years ago. I put 20,000 in and I made $2 million and I retired. You don't hear that because everybody is crowd focused. You're not going to find a crowd of people talking about the next great investment on stock twits, seeking alpha. And in fact, the great investments will be trashed at the best time when you need to be invested in them. But you need to be able to understand, to value what's going on, value the company, and understand that it's undervalued, understand it's got honest management, And there's still some luck in it, depending upon what you're investing in. There's no luck in it if all the assets are there, and it just takes time. So with Sears Holdings, matter of fact, I'm going to show you what people were saying about Amazon in the very beginning. And this is the cover of a magazine. And this was generally the consensus of what people thought was going to happen to Amazon, one of the greatest investments of all time. This was a major article, and it's laughable now, but it was not laughable then. This is 1999. They've got a picture of Jeff Bezos, and I'm going to read what it said. This is a famous article. And when you go inside this article, when you Google it, they name 90% of the retailers that went broke because of Amazon. They said, it's no way this guy is going to beat them. This is the cover story. It says Amazon.bomb. The idea that Amazon CEO Jeff Bezos has pioneered a new business paradigm is silly. He's just another middleman. And the stock market is beginning to catch on to that fact. The real winners on the net will be firms that sell their own products directly to consumers. Just look at what's happening at Sony, Dell, and Bertelsmann. Well, they happen to be a middleman today, and they happen to be the largest online, quote, retailer, among other things, in the United States. They revolutionized the way you buy books. They revolutionized the way we watch streaming television. But at this point, people just said they're just a middleman. People are catching on. Had you invested at that time, because they were very undervalued at that time, had you been able to understand that they were not losing money and that they were making a profit on Prime at the time, they just weren't disclosing how many Prime members they had, about $1,000 would have been, I think maybe it's 10,000 times the money now. It's an outrageous amount of money. But there wasn't a crowd. I challenge you to find any broker, financial advisor, so-called guru that bought Amazon at that time and can prove that they called it. Not luckily owned it, forgot they owned it. A person who said, I see what's going on. I see it's undervalued, and they load it up. Because if you actually understand how incredible the deal is, you don't have 4 or 5 shares. You're loading up because you're understanding what's going on. Great investments will not have a crowd. Your friends won't get it. The people around you won't get it. You won't be able to walk down the street and talk to 1 or 2 or 3 people that say, oh man, that's great. Let me tell you what's going on with it. It won't happen. So it's lonely. A guy named Patrick, who may be on the call, we used to talk. It's Eric, it feels lonely being invested in Sears. And most people don't want to be lonely. They want the water cooler talk. They want to talk about what everybody else is talking about. But you can't let emotion get in the way of math. Investing has nothing to do with emotion, but everything to do with emotion, because people are not rational or logical when it comes to investing. If they were, it would simply be math. It would not be hype. It would not be what people are talking about online. There's a crowd of people online. 95 comments to every 5 comments say, I'm crazy. Eddie Lampert's crazy. Bruce Berkowitz was crazy. Anybody who thinks Sears is worth anything is crazy. When you hear the word liquidation, 95% of Wall Street says they're liquidating because it's not worth anything. You hear the word bankruptcy, they're bankrupt because they're broke. These switches and these clicks in your mind automatically make you assume the negative. Oh, the stock price is low. That means the company's worthless. Most of the time, they're probably correct. The goal is to find the gem. The goal is to find the Amazon in 1999, the Apple in 2002 or 2003, buy enough of it, put it in the right accounts, be it retirement accounts or regular accounts, consistently buy, and don't blow the money when you get it. That is the goal. The goal is you won't find anybody who bought a stock at the top when everybody was talking about it who eventually got wealthy. Because when everybody's talking about it, the price is going to reflect what people believe is going to happen with it. You could have invested in BlackBerry, and then here comes the iPhone. 2-3 years later, they were down 95%. So just because a product is popular does not mean it's a good investment. Is it undervalued? is it so undervalued that if all else fails, you can't lose your money. Perhaps you'll make profit. That's what Warren Buffett calls the margin of safety. You can Google Warren Buffett margin of safety. I won't get deeper into it. So the reason I'm having this preliminary discussion with everybody is because for the last 5 or 6 years, and Adrian's going to pull up this post from White researcher on Seeking Alpha. And I'm going to give people just a little bit of information on this, and we'll go all the way into it. But this is important. 95% of the people I talk to say they're not online. They don't pay attention to the comments. But this is White Coat Researcher. This is something he posted on October the 2nd, 2024. He has a whole lot of followers on Seeking Alpha. He's been posting misinformation. Some of it he knows is misinformation. Some of it he doesn't know is misinformation. He's posted what he thinks is my address. He's posted what he thinks is confidential information about me. He's asked people to lie to the SEC, lie to authorities in California. He's posted insults, defamatory statements about me. And I talked to other people who are other contributors, and they say, Eric, why are you offended? I said, why don't you use your own name? And why don't you let them post those things about you? The problem is people believe the misinformation. So here's rule number one. If a person is anonymous online and the person they're talking about is not anonymous, they're probably working for someone who has a benefit if the stock or the bonds are deemed worthless. We're in a company that has been in bankruptcy since 2018. I challenge anybody to go to Seeking Alpha and see any company still in bankruptcy since 2018, 19, or 20. There hadn't been 5 comments about any of those companies probably collectively. But for Sears, 1,000 comments on this one last article. Because there are people who benefit if there's no payout in Sears. There are people who benefit if you sell your bonds at a discount or you sell your bonds at all. So they're reporting misinformation. Some of the people know it's misinformation, and they're anonymous for a reason. I know who White Coat Researcher really is. I know his real name. I know where he's located. I don't know who he works for, but he does not work for himself. He could be in his mom's basement on meth. We don't know. But this is what he told people. He kept redirecting people to the liquidating trust. And I'll just read what he said on October 2nd, 2024. He said, quote, he's quoting something that the liquidating trust put out. This is correct information that the liquidating trust put out. It says, as set forth in the liquidating trust last report to the court, the liquidating trust does not currently anticipate a return to general unsecured claims. Accordingly, the liquidating trust has yet to expend resources on reconciliation of such claims. So the liquidating trust does not pay us. And we went over that in the last video. If there's something left, if there was going to be something left, they were going to pay us the balance of whatever's left in the liquidating trust, whatever small amount that was going to be. That money would have been right there. It would have come from the liquidating trust. Those of you that are in JCPenney are familiar with those little small final payments that come. Our money, the general unsecured creditors' monies, are in separate trust. So I'm going to go back to this. White Coat Researcher, for more than 6 years, has written articles with inaccurate information, speculative information, and some of it just outright defamatory. So when I pose questions to him, I posed a $10,000 debate in front of a retired bankruptcy judge, maybe 3 weeks ago, 4 weeks ago. I said, we'll go in front of a retired bankruptcy judge. You make your case that Sears is worthless. I'll make my case that Sears is not worthless. And 10,000 to the winner. I'll bring 10,000. You bring 10,000. And Adrian's going to show you the slide that we got from him about a month later. Now, this is 6 years of him being online. He has thousands of followers. This is what happened when I put the challenge out. He says, I no longer write for Seeking Alpha. Seeking Alpha has changed a lot since I started writing. Almost all people in management and editors are gone, replaced by individuals constantly and fighting with over policies and article content. Not only am I not writing new articles, I have also decided not to post new comments, respond to direct messages. Basically, I'm completely done. Time to move on. This is a person who a lot of you have been listening to and following, because the second he posts something, I get the email. Or if 7 or 8 or 10 people, not necessarily you guys, if they ask me a question, all I have to do is go to Seeking Alpha because it's something he said. You need to understand who is giving you proper information. And if you have any questions from anybody online, you should ask them to show you more than one source. Because I could show you a document that says no money's coming from the wind down. The real question is, are there other sources that we're going to be getting paid from? And of course there are. Our assets and our cash and our real estate left bankruptcy on February 2019. Nothing happening at the SRZ Liquidating Trust has anything to do with us. You don't need to follow the bankruptcy. I don't follow the bankruptcy. So several people sent me a document that Adrian's going to post now, and I'm going to go over really quickly, about a payment that came from the wind down trust, or an announcement of a payment that came to the wind down trust that's going to the PBGC. That's the Sears pension. So the PBGC is the Pension Benefit Guarantee. I forgot the last word, association or what have you, but it's the Sears pension. So this came out on January 13, 2025. This is the bankruptcy. It has nothing to do with us. It's a payment, announcement of a payment to the pension. So the pension gets the first $97.5 million that comes in from any source, whether it's Transform or the wind down. They get the first $97.5 million, and then afterwards, they have an $800 million unsecured claim that is equal to our bonds. So after they get $97.5 million, every dollar that comes in is split on a 50-50 basis with us. So far, this $30 million that they're getting or already received puts them at $50 million. So the pension is owed another $47.5 million. If there's more money in the trust, in the wind down trust, then another $47.5 million will be on a dollar-to-dollar basis. It's possible that some more money comes into the wind down because of some other money that may come in. It is possible that enough money comes into the wind down where the bonds get a decent payment from the wind down, even though that's not our primary source of recovery. I want to make sure that's understood by everybody. Our full recovery comes from two trusts, the General Unsecured Trust and the Specified Trust that I went over in the last video. So you can watch the last video. But if there's any remaining money in the wind down, after the pension gets a total of $97.5 million, we are 50-50 with them on every other dollar. So far, with this $30 million, that takes their total to $50 million. So if it's more than $47.5 million left in the wind down from other sources, because there was some other money the pension was supposed to receive, and I don't know for a fact if they received that money or not. It looks like they received it. I'm trying to confirm it. If they did receive this other money that was supposed to come in, the estimate of that money coming in was in a document I sent to Adrian that she doesn't have to pull up right now. It was roughly $100 million total. If that money comes in, we don't get an even split of that. All of that money would go to them. So if there's some money left, there'll be a payment to the bonds from this source. But according to the math that I've looked at and what we did in the last presentation, 100% plus interest plus more is already in escrow to pay the bonds off, because the pension also is secured by Die Hard, Kenmore, and Craftsman by Sears. And if you go to Stanley Black & Decker, or you Google Stanley Black & Decker, Craftsman by Sears royalties, you'll see that $30 million a year is coming from Craftsman by Sears, even though we sold it, and that money is being set aside to go to the pension, so I hear. So don't pay attention to anything at the liquidating trust in the bankruptcy. follow the Transform Real Estate website and follow the Transform Co. regular business website. That is your source. I might have gotten 10 emails with this document. I don't follow the bankruptcy. That's why I didn't even know what was going on. Our assets are not in the bankruptcy. Whatever they're talking about on Reddit, Seeking Alpha, StockTwits, doesn't matter if they're not having a conversation about Transform paying us. This is a complicated bankruptcy. It's the most complicated I've seen, and all of Wall Street has missed it. Just like all of Wall Street missed Amazon. All of Wall Street, except Warren Buffett and a couple of people working for him, they missed Apple early on. One of the biggest investments in dollar amount was Apple, and it wasn't Buffett, it was a guy working for him that saw the value in Apple early. So if you're looking to be in a crowd, or you're looking to be around a group of people who are having want to talk about an investment, you have to get with people who want to have intelligent discussions about the value of the company. You don't want to watch CNBC or Bloomberg or go online and watch people make predictions. I think because Trump's in office that we're going to make more money. I got a lot of emails, texts, stuff on WhatsApp. If Trump's in office, does that mean Sears not going to pay us? If Trump's in office, does that mean politics has nothing to do with the math? Now, there are certain investments like TikTok that are political now. Yes, that will have an impact on who's in office and who's not. Fannie Mae and Freddie Mac, which I'm invested in. FNMA is the stock symbol, FNMAS. Those are politically motivated investments. The math is there, the companies are grossly undervalued, but there's politics behind why they haven't done the Fannie Mae payout. Trump said he's going to make sure the payout happens in Fannie Mae. Stock went up 3-4 times the money a month or 2-3 months ago when he said it. There are people on this call who have been with me in Fannie Mae for 5-6 years. They're up 5-6 times their money today. We don't know. Could have been another 10 years. But that is politically based. Sears is not politics. Sears is math. Sears is assets versus liabilities. Sears is complex, and it's purposely complex, just like Amazon was. People thought Amazon was losing money for 10 years. When you go read a book called 100 Baggers and you look up Amazon, they show you that the way the accounting was done, it was never losing money. But people thought he was losing money, and he legally could put that he was losing money. So if he's losing money, why would Walmart want to copy him? If he's losing money, why would JCPenney, Sears, Radio Shack, Borders Books, why would they want to invest? They could have taken him over. Who wants to take over a losing company? Who wants to take over a company that's liquidating? You've got multi-billionaire investors that were in Sears. Bill Gates, Eddie Lampert, Bruce Berkowitz, who left. You have people who were invested when the stock was a penny. That does not mean they're right or wrong, because there are multi-billionaire investors who were in Bear Stearns and Lehman Brothers, and they lost everything. So you don't invest because someone else popular or famous or rich is invested in it. You invest because you understand that it's undervalued. You want to gamble, you want to guess, you want to speculate, that's fine. But make sure that you're not on the back end of a great investment. You want to be on the front end. And to know you're on the front end, there won't be a crowd. There'll be a small group of people at best that actually are invested in it. And most of the time, nobody tells anybody about an incredible investment. They tell their close friends and family and nobody else, because they don't want anybody else to get it. They want to get all of it they can. There's no way I could have gotten Sears all by myself. And if I could have, I still wouldn't have done it by myself. So the key thing is to leave the bankruptcy alone and focus on Transform's real estate website and look at the properties being sold. Look at the website on a daily basis, the same way you were going to Seeking Alpha, StockTwits, and Reddit. And what happens with these anonymous people like Wyco Researcher, Elephant Analytics, all these people who were just defaming me, making up lies about me, getting me kicked off of platforms, they disappear when they actually stop getting paid by the people who are paying them, or they get the information and somebody else says, hey, we went over Eric's information. You're wrong. We're not paying you anymore. You know how much money you've cost us? People don't just leave platforms all of a sudden after being challenged to make $10,000 to prove their point. They don't do it. And they're not in the comp. Sometimes all these people are in one room. It's 20 or 30 people being paid to go negative on a particular stock or go positive on a particular stock. Sometimes it's AI. Sometimes it's bots. They're trying to create the appearance of a crowd. But the best investments will not have a crowd. And some of the best investments have been trashed by all the mainstream media, by CNBC, by Bloomberg. There was not one person to this day that have said, I did the work on Sears Holdings, even though they're in bankruptcy. I think it's a great investment. There's nobody who can say that. You wait a few years from now after this payout, there'll be people popping up saying, oh man, I called Sears Holdings. I'm telling you, I did it. The one thing that they won't be able to take away from me or us in this group is they won't be able to say somebody else called it. They won't be able to say that because it's too documented that nobody else called it. They'll say it was lucky, and that's fine. So I want everybody to make sure they are not focused on payments to other people from the wind down trust. This is not where our money comes from or our property or our new stock. You follow the Transform website and the Transform real estate website. And what we're waiting on is an IPO announcement or a merger announcement of Transform with another entity that's going to go public with another stock, and we get paid out, whether it's stock, whether it's stock and cash. That's what we're waiting on. I don't know when that's going to happen. I don't know when the deadline is, but there is a deadline. It just has not been disclosed to us. The IRS gives a deadline. We just don't get to see it. It could be tomorrow. It could be next week. It could be a year from now. But the stores have been liquidated. There are no more operating Sears and Kmart stores that they wanted to liquidate. I think there are 2 stores left in the United States, 2 or 3 stores overseas. Some of the store in Guam is really big. It makes a lot of money. But the actual stores they wanted to liquidate, there are none left. So I don't know if that's a sign that it's close or not. But the fiscal year of Sears Holdings was ending on February the 2nd. That was when it was ending. So who knows? Maybe it's in a few weeks from now. But I want everybody to make sure you read whatever comes out when they announce the payout or the merger. Make sure you don't freak out and make sure you don't make any rash decisions about it, because the negative people could come back out, or it could turn into, oh my God, this is the greatest investment of all time. And all of a sudden the whole world says Sears is the greatest thing in the world. But pay close attention. And if you are listening to anonymous people about stocks, you probably shouldn't be investing your own money. You probably should put your money in an index fund, and you probably shouldn't even look at it, because these anonymous people will disappear even after 5 or 6 years, like Wyco Researcher did. And there are so many emails, texts, and conversations I had, and I told people this over and over and over. I said, he's going to disappear before Sears pays out. He will not be able to take the ridicule. He can give it out, but he won't be able to take it because he swears he's correct. But he won't come debate in front of a retired bankruptcy judge for $10,000. But he'll dox me. And people say, why do you talk about this guy? I said, you put your real name and face online and you see what you go through. If I'm wrong, just beat me on the argument. Show everybody where I'm wrong. You don't have to, quote, dig up dirt or think you're digging up dirt. And the challenge is, it doesn't become an issue of whether or not something is proper or not, or whether my appraisal of the real estate is wrong. This is not Eric's thesis. It's factual. It's all documented. And you notice these people don't show documentation, or they'll misdirect you. And I'll say this, then we'll go and we'll take questions. I gave this example a few times. You cannot read a contract or a court order in isolation. A contract, a court order in isolations. You're married and you have an insurance policy, and you have this insurance policy on your wife or your husband. And it says, in the event of the death of Blair's wife, Jennifer Lopez, you're going to get $2 million. That's a clause in there. But there may be another clause in there that says, if you're the person that's charged with murder, you're getting zero. But you can't show up at the lawyer's office and say the insurance company's not paying you out. And you say, well, by the way, I killed her, but I still want the $2 million from the insurance policy. That's what's happening with Sears Holdings. Document 892 is the intercreditor agreement. It's Exhibit 10.4. They show exactly what happens to the unencumbered assets, what our interest is in them, what happens if they get moved over to another company, bought out of bankruptcy, what happens to us. It's all documented. It says those assets get set aside in a separate account, and when those assets are sold, that money goes into what's called a blocked account. You can Google blocked account. It's an unencumbered proceeds account. So those unencumbered proceeds, they've already disclosed they exceed more than the amount that were owed on the bonds. They exceed more than the amount to pay out on the stock. So I'm not doing anything incredible here. I'm simply reading the contract in its entirety, not in isolation. And I'm understanding that they already had the discussion about what is going to happen to the unencumbered assets, because you can't buy an unencumbered asset, but you can take it out of bankruptcy, sell it, and put the proceeds in a separate account and pay people according to absolute priority. And you can Google what absolute priority is in bankruptcy. It simply means the first lien holder gets paid first, second lien holder gets paid second, third lien holder gets paid third, unsecured creditors get paid next, stockholders get paid next. So we can look at what Transform has sold in Avail Solutions, Die Hard, almost $2 billion in real estate. We can look at all of that and do the numbers, and we see we're in the money. That is not complicated. The hurdle everybody has is everybody's still following the bankruptcy. Our assets left the bankruptcy. If two people divorce and the husband is your friend and the husband got 100% of the assets, you don't want to be chasing the wife for assets if you were owed money from the couple. Unless the divorce says you can't sue the husband, you don't chase the person who doesn't have the assets anymore. You're going to try to sue the husband. So our assets left bankruptcy. Nothing happening at the bankruptcy needs to be followed. If you get bored, go through a couple of the other YouTube videos. Go to the Transform website. See if they've sold any real estate. Go to the Transform regular website. See if they put a new press release out. You don't need to be in the wrong place. And please don't email me what's going on at the Wind Down Trust. Doesn't matter to us. Our assets are over at Transform. And I am praying that this is the year we're going to do the merger, the IPO, and or the payout. But all the stores are closed that we were intending to liquidate, and those proceeds are set aside as well. And anytime you want to be online, don't get into debates and arguments with people who don't want to discuss the amount of debt that was left to be paid. The last 2 to 3 weeks, I was on StockTwist asking people to show me what debt was left to be paid. How much debt is left to be paid? As soon as you ask those questions, they start trolling. They start going negative. They start being defamatory because they don't want to have a math discussion about math. It's all assets and liabilities. That's all bankruptcy is. It's a legal status. It's assets and liabilities. Some companies that file bankruptcy are worth more than some companies that have never filed bankruptcy. They might need to restructure their debt. But it's extremely rare to find a Sears Holdings. It's extremely rare that this occurred. Extremely rare. So I want to make sure that everybody is following the right websites. So it's transform.com, or I think it's Transform Co. Adrian can correct me, and the Transform real estate website. That's where you want to be. The Wind Down Trust is simply the remaining assets of Sears Holdings being liquidated. So that $30 million that they just paid out to the pension has nothing to do with us. We're waiting on a payment from Eddie Lampert's entity, which is the technical name right now. The parent company is Hoffman Topco, which was the big main office in Chicago where I was there. Some of the people on this call were there at the annual meeting. They just sold that less than a year ago for about $100 million. And we just won a case at the district court. It's over now. So the Mall of America lease that was worth $100 million, that lease went back to us as well. We don't need that quote extra couple of $100 million because I've already proven it's more than $5 billion in cash in escrow to pay us. And the bonds are only $700 million. And the rest of the money will go to the stockholders. So that's in the last YouTube video that we need to follow. So I think that's it. So this is the official website. You want to follow this website. These are the remaining businesses that the bondholders and the stockholders own. We've got Sears Home Services. We still own Sears and Kmart Online, which was doing more than $2 billion a year. Sears Home Services. We sold Innovel Solutions to Costco for $1 billion more than 4 or 5 years ago. That money is in escrow. We sold Die Hard. That's $200 million. That money's in escrow. And we already showed last on New Year's Eve, we sold more than $1.8 billion in real estate. That money's in escrow. All this is publicly available. So the bankruptcy has had nothing to do with us since 2019 because these assets and these businesses left bankruptcy in 2019. If you go to this website and go to March 17, 2020, and maybe Adrian can pull it up real quick right now. This was the day they announced that we were debt free.
Do you want me to go to the blog? Am I looking for a press release? What are we doing?
Press release, March 17, 2020. Thank you, Adrian. I think that was the date. This is where we need to be. There's March 2020, March 17th, if I'm not mistaken. There it is right there. Okay, this is now remember, Sears is supposed to be broke. Sears isn't supposed to have anything going on. Sears didn't have any assets. All Sears had was a whole bunch of raggedy stores, remember? Well, how does a company sell an entity you never heard of for $1 billion? This company did delivery for Amazon, Costco, Home Depot, and they did installations of washers, dryers, so on and so forth. So this was $1 billion. This money has been in escrow that long. This is publicly available information. The problem is people don't realize that this money goes to the bondholders and the shareholders. I proved that 4 years ago. The issue is people are saying, what's taking so long? Well, there are no more stores to liquidate or close. Right now, I don't know what's, quote, taking long, but I promise you this. It's a benefit to how long it has taken, because if there was no benefit, it would have already been a payout by now. But there are no more open Sears or Kmart stores as of 2 months ago. So I'm expecting there to be something happening this year. That's my guess. Don't hold me to it. But it's more than $5 billion in escrow. And this was just one of the billions. And if you read this further, they say the company was debt-free as of this date. So we've had a debt-free company since March 2020. And this is the website you want to follow. And the Transform Real Estate website, what's the name of it again? I keep forgetting, Adrian. Can you pull it up? I forgot the name of it.
Sorry, you want me to pull up the name of what?
The Transform Real Estate website. We did the presentation last time. I forgot.
Hold on, let me find it.
And you can keep up with the real estate that's being sold, but it's 1.7 billion in real estate sold so far. We've got more than 2,000 more acres to go. We don't have to sell all those 2,000 acres before they get done, but they're just giving us an update. By the way, if this is a private company and it has nothing to do with anybody else, why would somebody publish all of the information and the financial numbers on their private company? That's the question I couldn't get anybody to answer for me. You don't publish information on your private company unless you have other constituents. So here it is. It's Transform Co. Properties. And you can look up, see the Mall of America. We won the lawsuit. Remember, they took us all the way to the Supreme Court. We had a lease on that property, $10 a year for 100 years. We go into bankruptcy, and the mall owner, some lawyers, they tricked some lawyers into thinking they could get the lease back. It got all the way to the Supreme Court, and they lost. That lease is worth $100 million. It's back with Sears and Transform. But It was a $10 a year lease, 100 years. I think it's 70 years left on it or 60 years left on it. Okay. So this is the website to track the real estate. Click on our properties and let's see if that list pulls up real quick, Adrian. Completed transactions. Go back up just a little bit. And these are some of the properties that sold. And if you take a look at this list that Adrian is scrolling, if you go to document 892 in the bankruptcy for unencumbered properties, you'll see that these are the same properties that they're putting in escrow and the money gets paid to us. These are the same properties. It's document 892. It's a long list of real estate properties, and here they go right here. These are the ones that have been sold. This is $1.7 billion, more than 400 or 500 million in leasing income. All this is on the website. You don't need to be on StockTwits, Seeking Alpha, or Reddit. You need to be on the official websites where your property is. Transform Co. Properties. And they did a full update that's in the last YouTube video we did on Christmas Eve. So this is where you need to be. You don't have to send me any emails from what's going on with the bankruptcy. Has nothing to do with us. Our property's been gone since February 2019. Lots of misinformation out online. The official information is right here. Transform Co. Properties and transformco.com. All right, I'm good, Blair. We can start the Q&A.
Okay, everyone. Now, if you can, please, in an orderly fashion, just raise your hand if you have a question. And again, probably no broker questions, but if you have some general questions, please, by all means, go ahead and ask Eric. We have Motorcycle Chick with her hand raised. Go right ahead, please.
Hey, first of all, thank you guys and everybody working behind the scenes to help us, and I really appreciate you guys. But and I just want to make sure that I understood correctly. Everything is still the same. We're not sure exactly what the payout is going to be yet. That's what I'm hearing still, correct, Eric?
You mean the amount?
Well, it's for, no, not the amount, but like the stocks, shares, if they've decided 50-50 or anything along those lines since we last talked.
No, but they, by law, somebody's got to mute out. Somebody's got to mute out. By law, by law, we have to get at least 40% stock because of the type of reorganization this is. So it's going to be 40% stock no matter what. That's the minimum of stock. It could be 99% stock, 1% cash, 50% stock, 50% cash. It's going to be one or two, but it won't be less than 40 because it's what they call a 360A reorganization. And that type of reorganization requires that the consideration be at least 40% in stock of the new entity that has been formed from Eddie Lampert's company merging with Sears Holdings and liquidating. Okay, you good? Okay, got it. All righty. All right, thank you. Thank you. Go ahead, Blair.
Thank you for a question. Anybody else has a question, please raise your hand. Now's the time for the questions. Almost 50-something people in here, no questions?
That's surprising. That's surprising.
That's surprising. That's surprising. Okay, well, let me be more specific. Did anybody have a question about Adrian's smile? Any questions? Wait, somebody just... Daniel.
Yeah, that was
Daniel,
me. I was joking about Adrian's stuff.
Yes.
Okay, everybody else mute out. Okay, go ahead. What'd you say, Daniel?
Oh, hey, Eric. Thanks a lot for doing this again. Hey, just a quick question. This is a little off topic, but I was watching a podcast with Bruce Berkowitz recently. He had mentioned that he had kind of gotten out of the Sears play, I guess, altogether, mainly because he was trying to get on the board. And or, I'm sorry, he was on the board and they weren't there was something about voting rights that he was not in agreement with, and so I didn't know if you knew anything about that or like why he would have left. If you know, again, I'm not doubting any of the work that you've done, but do you have any idea why he might have left out of this investment, since he was kind of already in it in the value space from the beginning?
I'm gonna have Adrian pull up this clip of Bruce Berkowitz, and I'm gonna tell people who he is. That's a great question, Daniel. I don't know if you came on late, but I did discuss a part of it, but I think that's important because I thought about showing it. So for everybody on this call, Bruce Berkowitz was the second largest shareholder and probably in the top 5 largest or top 6 largest bondholders. Okay, Bruce Berkowitz is a famous value investor. He's like a younger version of Warren Buffett. His track record was absolutely amazing. Not as good as Warren Buffett, but really good. He was deemed the investor of the decade for the decade of like 2000 to 2010, I think, or 2010 to maybe, I forgot which decade, but it was right after the crisis. He made a lot of money on AIG when they went into conservatorship. He was in General Growth Properties, another big company that went bankrupt, a mall REIT. They own the Four Seasons Mall in Greensboro and some other major malls around the country. Bruce Berkowitz he has a fund called Fair Home Fund. He's a great value investor. He was on the board of Sears for a couple of years. And Berkowitz said he gave up on Sears. So Daniel Brooks is asking, my opinion on why I think Bruce Berkowitz pulled out. Well, this is the podcast he's talking about. I'm going to play this. This was the second largest Sears shareholder, and he invested because of the real estate. So he was on the board for 2 years. He's an absolutely amazing investor. I've spoke to some of his people before. They've called me some years ago, and he's a great guy. It's called Fair Home Fund. Fair Home Fund, and right now he's leading an investment called St. Joe. It's a real estate. It's thousands of acres of land that the DuPont family used to own. It's called St. Joe, and he's turned it into an absolutely amazing investment. And this was a short clip on him talking about leaving Sears and why he left. And then I'm going to go a little bit further into that. Go ahead, Adrian.
We can't hear it, Adrian.
Can you guys hear this?
Yeah, we can hear it now.
Now we can hear it, yes.
Let's start it over 1 second.
Okay.
Joe, I learned from Sears that if you're going to have a big position, you better be in a position to defend that position.
And the lesson from Sears, because Sears, again, the reason that you bought Sears and took such a large position, not because of the retail business, it was because of the real estate, right?
Yes, it was from day one. I thought that Sears had the potential to be the world's largest real estate company.
Right.
History has shown from the ashes of failed retailers getting great real estate plays. So I thought it was quite simple. Stop the retail, use the cash to redeploy the cash to the real estate. I was unable to convince management or the board, and
Right.
I've been on the board for a couple of years.
Right.
I was the only one that bought into it, and I think it's obvious that that was the way to go.
Right.
And think
That's it.
Okay, so I can't tell you why anybody stays with an investment or not, but I will tell you that Bruce Berkowitz was with us. He recapitalized General Growth Properties in bankruptcy. He bought the bonds. He made about 3 times his money, which was about $3 billion. I was in that investment, but I saw an interview with the same lady, I think it was, or another lady, and he said he didn't buy the stock of General Growth Properties. He said he didn't see how the stock was going to get a payout. Well, the only reason the stock got a payout is because he put the $1 billion into the bonds. So if you know bankruptcy, you would have bought both. But his friend, Bill Ackman, and you can look this interview up, made 50 to 100 times his money on the stock. So bankruptcy is not his specialty. So my personal opinion is he left shortly after the company filed bankruptcy because he didn't understand what was going on. Because everything that he suggested they do 5 years ago, they're doing now. But there are advantages of liquidating the company in bankruptcy versus liquidating outside of bankruptcy. So he was on the board advocating for liquidation outside of bankruptcy. But all of these tax advantages that Lampert is now getting, you can't get unless you're in the type of reorganization that Lampert did. So if you don't understand what's going on, you leave the investment. And he said he invested for the real estate. He wanted the stores closed, and he wanted the money redeployed to real estate. Adrian just showed you they're redeploying money to the real estate. The problem is most people think bankruptcy means broke. And 95% of the time, it generally does. In this case, it does not. You can have a lot of assets and lack of liquidity. You can have tons of acres of land, real estate like we did, and not necessarily have tons of liquidity. And it takes time to sell inventory in 700-800 stores. It takes time to sell thousands of acres of land. And when you're selling commercial real estate, it doesn't sell in a week or 2 weeks or a month. Some of those deals take 6 months or a year because you've got to get, and we've got James Grace on here. He does real estate development and a whole lot of other great things. It takes months and sometimes years just to get approvals to repurpose a particular mall parking lot or a mall space, or to get approval to build the condos. Here in San Diego, on the Sears property, they're building high-rise towers where the Sears was. It's not a parking lot, really. They're building expensive condos right by La Jolla. And this used to be old Sears in a really nice mall. So they're doing this around the country. And if you go to the Transform Co. real estate website, you'll see some of the actual redevelopments that they're doing. But I can't tell you why Bruce Berkowitz or Bob Jaffe, who's another great investor, I can't tell you why these people were in it or left early or left late. I can't tell you why. But he said he said he didn't have enough control and he wanted them to liquidate sooner. And there were just too many advantages to liquidating through the bankruptcy process and the tax reorganization process. And he said nobody would agree with him. And it takes a lot of time. Bruce Berkowitz was in Sears 2 or 3 years before I got in. I was in 2016. So he might have paid $50, $60 a share. So that's a long time to wait. And he has a fund, and people are watching this $60 a share go down to 20, 30, 10, 5, 1. So they just assume you're wrong. But if you understand the value of a stock or a company when the price goes down, as long as the value hasn't gone down, you probably should be buying more. All right, any more questions? And I hope I answered your question, Daniel.
Go ahead, Charles. You have your hand raised?
Hey, good evening, everybody.
Good evening.
I just, and my question is a little different. It's kind of more so, I guess I'm going to ask you to be a fortune teller or a future teller, but what direction, once we get out of this phase and the new company's up and running, what kind of business direction do you feel like they're going in, or do you know? Is it going to be more real estate based? Are they going to be looking at like renting their retail properties out to other businesses, or what form of business do you see them doing?
That's already in the process. You can go to the website and you'll see all the different businesses that are going on. It's real estate development going on. It's Sears Home Services. It's Kenmore still going. Craftsman by Sears is still going. The online business is still going. I think he's going to build a conglomerate similar to Berkshire Hathaway, because so far he's done everything they've done. It's just nobody realized what Warren Buffett did. If they did, maybe they would have seen this coming. But he took a large company with a lot of value and liquidation. He liquidated it over a lot of years, and he took the remaining parts and started reinvesting into more profitable things. That's what Warren Buffett did with the Berkshire Hathaway textile mills, and it looks like what Eddie Lampert's doing with Sears Holdings. So I think he's going to buy other undervalued companies and merge with those companies, do exactly what Warren Buffett did. So far, He's done everything Warren Buffett did to form Berkshire Hathaway. And everybody missed Berkshire Hathaway too, because everybody knew all the textile mills were closing and liquidating. So who's investing in brick and mortar retail? But we're not investing in brick and mortar retail. We're investing in a holding company with a brick and mortar retail division with billions of acres of land. Billions of value in the real estate and other businesses. You know, I just showed you Innovel Solutions sold for $1 billion. How many people here knew Sears had another business that was worth $1 billion? And the online business is still doing over $1 billion a year. The credit card that Sears put out is called Shop Your Way. Doesn't even have the Sears name on it. It makes $400 million a year. There's no Sears name on it, and it's like a MasterCard Visa. You can use it anywhere. So I think he's going to build something similar to Berkshire Hathaway, because so far, out of 10 things Warren Buffett has done, he's done 9 of them.
Okay, Charles. Hope that answers your question. We're going to move on to Cynthia. Cynthia has her hand raised. Cynthia, go right ahead.
Hi. When I could get that website again?
Somebody's going to put it in the chat for you.
Okay. All right. Thank you.
It's 2 websites, one for the real estate and one for the main company. Somebody will put it in the chat for you.
Okay. Thank you.
You're welcome.
All right. Anybody else have any questions for the man while we got him? Charles, you got another question?
Yeah, I got another product question because I'm just curious. But does Transform Transformco or Eddie Lambert still own all the old Sears products that are still out there? So like, did he sell, like, I'll just use a Die Hard battery, for example. Like, did he sell that to AutoZone, or does he still own the product and distribute it to them?
He sold Die Hard to them, and he sold Craftsman by Sears to Stanley Black & Decker, but we still get paid a royalty on the new products made by Stanley Black & Decker. That's about $35-40 million a year so far in the last 4 or 5 years.
And do you see him reclaiming that once he gets this conglomerate up and running, or do you think those products will still stay where they're at?
I think they'll stay where they're at.
Okay. Thank you, Eric.
But we still have Kenmore too. We own Kenmore outright. That's ours.
Where are they sold now, if you don't mind me asking?
It's on the
Kenmore
website.
product.
It's on the website. Go to Transformco or Google. You Google Kenmore. As a matter of fact, if you go to the website, they'll show you thousands of locations. When you Google that information, it'll pop up. It's everywhere. They got a whole new presentation. Just go through the website. Take your time. Everything is there.
Okay. Thank you, Eric.
All right, no problem.
Okay. Anybody else have a question for Eric while we got him here? Thank you, Charles, for your question. Daniel, you have your hand raised. Go right ahead.
Oh, hey, Eric. Just one more question. So I actually tried to go to both Schwab, really just through Schwab the other day to pick up some bonds, and was not able to do it. They kind of put an offer out and weren't able to find any on the market. So do you know are you guys still able to buy those?
I can't answer any broker questions or anything like that, but
Okay.
But you could probably, if you're trying to buy, you're a broker, aren't you, Daniel?
Yes, I am.
Okay, so I can. So Daniel, you may have to you have to just keep the orders open at the price you want.
Okay.
You might have to keep it open. You can't just go. You might not find them on Monday, but Tuesday you might find 5 million and face 10 million. Just keep it open at the price and just check what the prices are going.
Okay. Thanks a lot.
Okay, no problem.
Okay, a motorcycle chick has her hand raised. Go right ahead, please.
Yeah, and I just want to just make sure that I'm understanding too, because of everything that Sears has and all the assets that are there. I just want to make sure that I understand that those things will still, as long as we have and maintain our shares of stock, with them, with the new company, that we will still get royalties from those items that Sears is still making money off of, correct?
Yeah, that money's going to Transform right now, which is our company. Yes.
Right. And even afterwards, after everything is settled, we still will
Yeah.
continue to get the revenue from those things, right? The credit card, the online business,
Yeah.
and things like that,
Yeah.
correct?
Yes, that's the business. So nothing changes because they give us our part. Nothing changes
Okay.
because they give us our part. Right.
Okay. Just checking.
Yeah.
Thank you.
So our stuff is set aside right now. So our percentage of whatever that money is set aside in those blocked accounts. They call it the unencumbered proceeds account. We went over it in the last video. So that money is in escrow, and under management of Eddie Lampert.
Okay. Thank you.
No problem. Okay, Blair.
Okay, everybody else have any questions besides Charles? Does anybody else have any questions? We'll
No,
get to
you
you
okay?
in a second, Charles.
1 second,
Anybody
Charles.
else
If
have
not,
any
we'll go right
questions?
back to you. There's no problem. He's okay.
There's a couple interesting little things happening in the chat. I don't know if you guys have seen that.
No, go ahead.
Thomas has a question in the chat. It says, what do you reply to those who say that unencumbered assets were included in the APA and purchased with the other assets for approximately 5.2 billion total consideration, including some cash, a credit bid from ESL, assumption of liabilities, rolling the junior dip loan? Why would all of the assets purchased be listed in the APA in a list, including the unencumbered assets?
That's a good question. Hey, do me a favor, Adrian. That is the #1 question that people have been asking on StockTwits, and perhaps that person does not want to be public. That's fine. Can you pull up document 2355, the pro forma, for me?
Yeah, 1 sec.
Okay. Did everybody understand what he was saying? He's asking, he asked the question, he's saying the asset purchase agreement shows the unencumbered assets being purchased, quote, by Transform or Eddie Lampert. So this is the hurdle. This is the hurdle most people have. So I'm gonna show proof from the bankruptcy documents. All right, so this is document 2355-1. I did not create this document. Adrian did not create this document. This document came from the bankruptcy. So this is the answer to the question in the chat. This is the pro forma. The purchase price, if you Google Sears Holdings purchase price, it's going to show roughly $5.2 billion. So as Adrian scrolls down for me, you'll see what was purchased right here. I mean, scroll up. I'm sorry. They're telling you the date of the auction, January 17, 2019, and it was approximately $5.2 billion. Now, this is the reason there aren't 1,000 or 2,000 people buying up the bonds, because you can't buy the stock anymore because people did not understand or know this document was out there. This is publicly available. You can go to Prime Clerk and see this yourself. Because people online say I'm making up documents. You can Google and find this document yourself. It says the purchase price was approximately $5.2 billion. There were 425 going forward stores, 223 Sears, 202 Kmarts. Right here, it shows you what went over to Transform. There was 1.3 billion in an ABL credit facility. An ABL credit facility is an asset-backed loan, and retailers have loans backed by inventory. So they call it an ABL revolver. So it's a loan against the inventory. All retailers have these loans. Eddie Lampert primarily funded ours. So here's what went over to Transform, and I'm going to show you that the unencumbered assets were not paid for, because the person who asked the question in the chat said, what do you say to people who say they paid for the unencumbered assets and we don't have anything coming? I'll prove to you that they didn't pay for them. It says right under here, 350 million rollover of existing junior dip. Does everybody remember New Year's Eve? I showed that the junior dip was secured by 3.9 billion in unencumbered assets. Does everybody remember that? So, okay, does everybody remember that they're only owed 350 million? So if 3.9 billion was the minimum amount that those assets were worth, including the real estate, once the 350 is paid off, there's 3.5 billion left. And remember, the judge asked that question. If you go to the last video we did, the first screen, the judge is asking about what's going to happen to the 3.9 billion once you pay off the 350 million. Because they didn't put up the 3.9. Then there was 175 million in real estate debt. That real estate debt was against real estate that appraised for $1,075,000. I have that document too. So if it's $1,075,000 in real estate, once they sold off 175 million of it, they have roughly another billion left. Once you take out the 350 million from the roughly 4 billion, you got another 3.65 billion. We covered this in the last video. So scroll down a little bit further, Adrian. Let me show them the proof. So here's the pro forma. The roll junior dip on both sides is listed at 350, not 3.9. So that 3.9 just moves over to transform. The 350 was paid on the closing date. Look at the date of the document at the top, February 1st, 2019. In the last video, I proved they paid the 350 million on that day. Adrian, do you have available the document where they said they paid off the junior dip at closing? Let me see, can I find it really quick? Is everybody following me so far?
I am.
Okay, so the 5.2, so scroll a little bit further. See where it says 5.1, we round to 5.2, right here. That 5.2 is the price. Some of it is assumed liabilities. You see rolled home services, PA, gift cards, 1 billion something, APA liability, admin expense, assumption of sparrow debt, 1.2. The 3.9 is not there. You see where it says real estate debt bridge, 175. That's $1 billion something worth of real estate. So that's $4 or $5 billion right there that was simply rolled over. So that's the proof. They never paid for it. They never alleged to have paid for it. The only thing they say is we're bringing it out of bankruptcy, and when we sell it, we're separating the money and into an unencumbered proceeds account for the benefit of those other parties, which are unsecured bondholders and shareholders, because nobody else is owed any money except the pension. It's the pension and the bondholders. So the pension are owed 800 million, bondholders about 700 million, the rest goes to shareholders. So that's the answer to that question. I don't know if the person in the chat understands that they've gotten the answer. And by the way, you can check and see if you want. The junior dip was paid off at closing. That's how we know they didn't pay for it. And we can find the document if you want. Or you can come on the Zoom. You don't have to show your face. And we can pull the document if you want to see it, whoever that is. Might be Wyco in disguise. He's welcome anytime. He's welcome anytime.
Thomas, it just says.
But we've got the proof that the junior dip was paid off. We did it in the last video. Let me see if I can find it. Everybody understand that the unencumbered assets were rolled over with a lien on them. And once that 350 was paid off, that stuff was free and clear.
Hey,
Yes.
Danny says, I think that's the guy from Stockstwitz going by the name of Crooked Mirror.
Oh, that's fine. That's fine. He's welcome. He's welcome. He's welcome. He's welcome. Everybody's welcome. Wyco Research is welcome. I've been telling him for 5 years. We can come talk about the facts.
Absolutely.
Okay, so the junior dip was paid off. Let me send this really quick. Adrian, just pull this up. All right, so Crooked Mirror, whoever, did I answer your question? because
I don't
there's
even
no,
know.
I'm sorry, there's no payment. There's no payment for those assets. It says 5.2 billion. Because if you don't pay for something in a bankruptcy, you have to make an agreement with those creditors that if you take it out of bankruptcy and sell it, you have to pay them. Especially if they have an allowed claim. So here it is right here. This is February 11th, 2019. The judge is asking, is there a value here in the unencumbered assets on a reasonable basis in excess of either 3.9 billion or 3.5 billion, depending on how you count the rollover of the the junior dip? And he says, I think there is, Your Honor. So the rollover of the junior dip, it's clear the judge knows that they're securing the junior dip with $3.9 billion. That's clear.
Right.
That's clear. And we know
Yeah,
that the junior dip was paid off. Go ahead.
he just said thank you. He's clear.
Okay, good to go. All right, any more questions?
Any questions, anybody? Well, we got the man here. Going once, going twice. Tori, you got a question? Anybody?
Anybody?
Did not mean to do that.
Okay, no problem.
Okay. Yeah, I believe we're good at the moment.
Okay, we think we're solid. Did we cover what we need to cover?
I believe so, Eric, as always. Very
Okay,
thorough.
so
Very to
everybody's
the
got
point.
the website information they need to be following, correct?
Correct. I posted it in there too myself from what Adrian
Okay.
got here.
Everybody
Yes.
realize that the wind down has nothing to do with us. The bankruptcy, you don't need to follow the bankruptcy. Everybody clear on that. There's nothing in the bankruptcy. Our stuff isn't there. So please, no emails about what's going on in the bankruptcy. Adrian and I are working on another project, and we're just waiting on Sears right now, as you know. We're waiting on Sears. But don't send me anything going on in the wind down of the bankruptcy. I don't need it. Now, if you find something in one of these websites and I haven't checked, please send it. They sell a property for 100 million, 50 million, 75, or they sell Kenmore, send that to me. But if it's not from one of these two websites, we're just waiting at this point. We're just waiting. And I'm still buying bonds, but I'm not suggesting anybody buy, sell, or hold any security, but that's what we're doing. Matter of fact, is that the presentation right there, Adrian?
What do you, the presentation from Transform?
Yes, December 24. Is that the one that showed all the real estate and the numbers? Yes. Yeah, do me a favor, blow that up, blow that for me real quick before we go. Before we go, blow that real big first and then start it over.
All right.
Okay. Okay, because I wanted James Grace to see this too. I think he's still on. Okay, these are the numbers. Those same properties that here we go right here. Already 1.7 billion in asset sales, 620 million in net lease value, another 1.5 billion in real estate left. So 1.5 plus 1.7 gets you to 3.2 plus 620 million. So in real estate alone, we're talking 3.8 billion. We're only owed $700 million, guys. We're owed 700 million and the pension is owed 850. That's it. So the real estate alone is almost quadruple what we're owed. Mm-hmm. So that's why I'm talking about the numbers, because the math is right here. This is not Eric's thesis. This is not what Eric believes. These are the actual numbers right here. The disconnect is what I just showed, Crooked Mirror or whatever the guy's name was, is people don't believe we have an interest in this entity. All the legal documents say we do. The same real estate properties that are listed here are listed as not paid for in the bankruptcy, because in bankruptcy under section 11363K and 1129B2A2, when a person does, and this is another question people had online, they said, well, why didn't we get paid on the effective date? Because this is what they call a net orderly liquidation value. I mean, a liquidation. So you're liquidating, but you're not selling stuff. Everybody mute out. You're not selling stuff for 50 cents on the dollar. These stores ran for a few years and then they closed and then they start redeveloping the real estate. When you see a retailer liquidate real quick, 90% off, 60% off, 50%, they generally don't own the real estate. And we had stores that were profitable. 425 of these stores were profitable. So they ran at a profit for a couple of years, and then they closed down. All that money went into escrow for us. So there's a whole 600-700 stores. Each store has an average of 5 million in inventory. The inventory turns over twice a year. All that money is in escrow. It's called the going out of business store, GOB money. All this is documented, but it's extremely difficult to follow because there's nobody coming out explaining the technicality and the complexity of the bankruptcy. It's all misinformation. So anyway, go ahead, Daniel.
Yeah, Eric, just a couple more questions. As far as when you mentioned that what was needed to be paid out was 700 million, I believe you said, in the bonds. Are you talking about that's the face value amount that's outstanding right now?
Yeah, the face value total amount of the bonds owed is roughly 700 million. And
700 million.
Our group has 40% of that 700 million.
Okay. I was gonna say that's I would imagine that we had a pretty decent amount of that. And then finally, do you have any idea what the volume or the number of outstanding shares are? Just the total amount?
No, it was 110 million at the time of the bankruptcy, but the merger would make that number 55 million or less. The merger would make it 55 million or less.
Okay. All right, thank you.
Okay, no problem. So as you guys can see, the reason people aren't jumping up and down and buying the bonds is because they don't realize that the bonds get paid out of this money. If they did, the bonds wouldn't be selling for $20 if people knew they were worth $1,000. The actual math, if you know there's only 700 million owed and it's already 1.7 billion sitting in an account, plus another 1.5 billion in real estate, plus another 620, you'd be going and buying the bonds. But the misinformation has pushed people away from an all-time great investment. That's why we have the opportunity. The opportunity wouldn't exist if everybody could have figured it out. So, and this is supposed to be a private company, according to my detractor. If it's private, why are they telling the public? And why does he say, right here, Transform Code Properties achieves value on behalf of its stakeholders? Well, if it's private, who are the stakeholders? Via acquisition, development, leasing, operation, structuring, and disposition. So document 892 in the bankruptcy lists all the real estate. It's 1,100 properties. Those same properties are listed right here. They were never paid for. And as they sell or as they get leased out, that money is in a blocked account, according to the bankruptcy, called an unencumbered proceeds account. And an unencumbered property has no lien, no mortgage, nobody to pay. We're next in line to be paid. The Sears pension is owed 800 million. We're owed 700 million, and we're pari passu. So the next money that comes in after the pension gets the next 50 million, it's $1, $1. So the pension is not in front of us. Their 800 million is equal to us on a 50-50 basis. So that means the bonds are whole. That means the bonds that cost $20 today are worth $1,000. Go ahead, Blair.
Cynthia has her hand raised. Go right ahead, Cynthia. Cynthia, you have a question? Hello, Cynthia, you there? Can you hear me?
She's muted. I wonder if she knows.
I don't think she does.
Just says she has her hand raised.
I put a question in the chat.
I'm sorry, I pressed the button by accident.
Okay, so no questions, Cynthia?
No, I don't have a question.
Okay.
Melissa has one in the chat.
I was just getting to that. Hey, E?
Yes.
Melissa has a question in the chat. It says, does the denial of the claim that Sears assets were undervalued have an impact on anything?
What denial of what was that? Which claim is this?
That's what I wanted to know. Does the denial of the claim, who's making a denial? The denial
Yeah.
of the claim that Sears assets were undervalued have any impact on anything?
Oh, she must be talking. Go ahead, Melissa.
So, ESL has been in court, and I think they went as far as the Supreme Court regarding the fact that the assets were undervalued, and the Supreme Court denied that in 2023. So I just wanted to know if there was any impact on, I guess, closing out the bankruptcy.
Yeah, it was an impact. There was a settlement in that case, and Eddie Lampert gave us a claim worth $718 million. That covers our bonds right there. I'm gonna give you the document number.
Okay, thank you.
And I'm glad you asked that, because most people thought it had a negative impact. So there was a lawsuit between ESL, Eddie Lampert, the former CEO, and the majority shareholder, and Sears Holdings. The result of that lawsuit was a cash settlement of $175 million, and Eddie Lampert had a claim worth $718 million. That claim he withdrew in our favor or at the option of Sears Holdings. He withdrew the claim, or he's donating the recovery to us, whichever one they choose to do. And that claim was convertible into stock, by the way. So either we're going to have $718 million less to pay, which I've already covered, or we're going to have an extra $718 million in cash, but the math will be the same. But it was a positive impact for us.
Awesome.
Thanks, Ed.
Pat has a question in the chat too.
By the way, hold on.
Read it.
Let me say this real quick first. Hold on, Adrian. The settlement agreement is document 10566, and it's the 507B claim. That's the claim that's worth $718 million. The settlement doc is document 10566. It was filed on August 9, 2022. It's $175 million cash and a 507B claim. That claim was worth $718 million. Okay, go ahead, Adrian. I'm sorry.
Oh, that's okay. Pat says, Eric, don't you think Eddie is kind of rubbing it into the market? He told everyone he was doing a transformation, and he currently has the name Transformco. Do you think he's trolling people or kind of?
Yes.
Uh-huh.
Yeah, I do. Yeah, I do.
I think it's trolling. I think he's just going, I told y'all.
Yep.
Yeah.
Why? This is another thing I said, and Blair and I talked about this a few years ago. Why would he, if he stole all of this stuff from everybody, why would he publish it publicly and throw it in people's faces?
Right.
That didn't make any sense. It wouldn't make any sense. We're the other stakeholders that he's been talking about from day one. We're the stakeholders. And I think that's why these detractors have disappeared. And when we start having a math discussion, like what debt was paid off at closing, what assets transferred to transform, nobody online wants to have those discussions with me. Nobody. They'll just start saying, oh man, look at what the stock doesn't trade anymore. The bonds are real cheap. And I'm glad the bonds are still real cheap. That means the opportunity still exists. Go ahead, Blair or Adrian.
Anybody got any questions? Go ahead, Archie.
Yeah, I just
He
wanted
has
to
a
say,
question. Go ahead.
not a question, but just something that Eric has been telling us to kind of, segue right from what you just talked about. remember that Eddie Lampert said that if I'm a betting person, which I am, I would say at some point we will be public again. That's what he told Wall Street Journal, and Eric's been saying that for a while now.
Yep. Thank you, Rod. I call Rod my co-counsel. Rod helping with some of the league. I call Rod my
Absolutely.
co-counsel. Between Rod and Adrian, it's Rod, it's Rod, Adrian, and more. Anyway. Yeah, but you're right.
But I wanted,
And that's a troll comment too. Why would he say that? Why would he say that? So I think he's having fun. Go ahead.
Here's a clue. Da 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 da.
That's right. He said, if I'm a betting man, and I am. So
Exactly.
there is no other way for us to get paid from a company like this, because he's not shutting it down, and we're not getting paid yet. They haven't paid out the money, but that money, it's well, the question nobody could answer the last few weeks I got back online was, why would they set up an unencumbered proceeds account if he already owns everything? You know, if me, Adrian, Blair, and James Grace, and Daniel and Melissa own a company, and it's just us, we don't put up a website so the whole world can see what we're doing and how much we're making. We don't have a separate account set up for Cynthia Lane and Howard Jones unless Howard Jones and Cynthia Lane have something to do with it.
Right.
There wouldn't be any separate account. It'd be one company account because we're the only interest holders. So this account was set up. It had to be. It was court ordered to be set up within 20 days after the sale because he did not own that property. He got permission to sell it or lease it and put the proceeds to the side for us. I went over that in the last video. And I think that was the sticking point to most people who were doubting. Why was that account set up? And by the way, for 5 years, they said there wasn't any unencumbered assets. And all they talk about was unencumbered assets. The judge talked about it. They talked about it in the intercreditor agreement. They talk about it in Exhibit 10.4 and the SEC filings. Then they show the entire list of 1,100 pieces of real estate. And more importantly, it's not just the Sears building. Each property had an average of 8 to 12 acres of land. You do the math. Each property. So my gut tells me we're close, but we know we're whole. We know based on the success of the real estate development, and we know that based on the sales that have already occurred. And $620 million in new lease value is not small money. And $1.5 billion in current assets under management is a lot. So that's $3.2 billion
Plus
in actual
1.7 billion
sales.
asset sales. Yeah.
Yep. This is publicly available information, everybody.
There's your whole information right there.
That's it. Scroll a little bit for me, Adrian.
sure.
They're going to
While
show
you're
you.
doing that, Eric, a quick question. So Sears
Go ahead.
in 2023 opened up a new store.
Oh, they did.
So they did. So are they moving away from a brick and mortar Sears store, or was that just something like they tested the water to see what type of response they would have received in having, gone through the liquidation of all of the stores?
Well, if they opened another store, they've got 100 years of data, more than 100 years of data from that area. And they were talking about opening some small format stores. They did open one in California as well. So they are going to reopen some stores that was announced, but they're supposed to be small format, maybe 10, 12,000 square feet. But if they open the store, they're not testing it. They already know that there's a huge demand in that market for a store because the online business is roaring right now. It always has. And if they open the store, that's a great sign that area is a great area for a store. But they're not going to open up 600 or 700 large stores, I'll tell you that. In the documents, they showed a plan to open a couple hundred small stores that are like 10,000 square feet that would sell mattresses, Kenmore appliances, Craftsman by Sears, tools, that kind of stuff. So they're not going to be in the large brick and mortar space ever again. But they will be doing small format stores, and they were showing that those stores were highly profitable. They only took about 6 people to run. That's likely, and there might be a few big stores, but it won't be hundreds ever again. I'll tell you that, because I was at the annual meeting right before, maybe a year before the bankruptcy, and Lampert was kind of laying out the plan. By the way, I made a mistake. I thought the headquarters sold for $100 million. In September 23, they sold for $193 million.
Yes.
That was where we
just looking at
yeah,
that.
you can look up Hoffman Estates headquarters and you'll see how big and how nice that place was. That's where the last annual meeting was, and that's where I met Eddie Lampert at. I scrolled that a little bit more for me, Adrian. Okay, this is it. This is publicly available, everybody. This is not filed with the bankruptcy because this has nothing to do with the bankruptcy. The bankruptcy is over. They're winding down the remaining assets of the estate, but this has been in place since February 19th. Scroll back up for me, excuse me, Adrian, where they did the timeline. See right here, February 19th. This was formation. This is what we're supposed to be paying attention to, and this is where we are right now in December of 24, right here. There is no reason to publicly publish your private company. If Elon Musk has a, what's that big AI company right now, Blair? The one they're talking about going public.
Grok?
The one they're talking about going public is a major AI company, the biggest one. Everybody's talking about it. It's not public.
Oh.
Something AI. You know who I'm talking about.
I do. I'm trying to remember because there's so many darn names.
Elon Musk sued him.
Ooh.
He just sued him. He said he had something to do with it. Look up Elon Musk lawsuit with them, and I'll tell you the name, and I'll show you what I'm talking about. It's a funny-looking guy that runs OpenAI. OpenAI.
Yes, OpenAI.
Anybody seen their publicly available numbers?
Nope.
Okay. And we're talking, a multi-billionaire investor. Why is he showing this stuff? Name another privately owned company by one person, and they just do a website and show all of this progress and start talking about other stakeholders. Doesn't make it, it's not logical. You don't need to understand all the legal I'm talking about. That's not logical. You don't put out your private information and mention the other stakeholders. So I don't think I can prove it anymore, and I won't be online with stock tweets, because what's going to happen is these people are going to disappear like a researcher did. They're going to because when the merger happens and the payout happens, they don't want the ridicule that comes with them spending 5 years saying that none of this is going to happen or publishing false information. They don't want that. They're going to disappear like he's doing. And I just tell everybody to follow the official websites. As difficult as that might be, nothing happening in the comment section on Reddit, Seeking Alpha, or StockTwit. That is not where you get your information on this. The official websites are right here. And we have highly educated people in our group. We have PhDs, MDs, CPAs. We have engineers. We have real estate developers, very successful entrepreneurs. We have law professors. We have brokers. We have professors of finance. We have people of all different types of education, high-level education. And for some reason, it is too difficult for people to follow the official site. They're following the bankruptcy, which I keep telling you, February 19th, all our stuff went over here. And they're following the comment section with a bunch of anonymous people who are probably in a room somewhere trying to create this negativity. And this works both ways. When something gets popular and people want to sell, or they want it to go higher, they have a group of people in a room. It's not legal. They do it anyway. They have 30 people in a room. They start writing articles, they start spamming, and they start telling people how great an investment is. They pay off influencers on TikTok, Instagram, they pay for people on YouTube, and all of a sudden, everybody looks like they like this stock. By the time everybody likes it, you're too late. You want to be early and undervalued. You want to buy early and sell to those who are late, if you ever sell. That is the key, and you follow the official sites, because as I told everybody for years, Wyco, Researcher, Elephant Analytics, all these people will disappear. when it's about time for the Sears situation to happen, or something so obvious they won't be able to argue with the people that are paying them that this information is incorrect. This is not my information. I didn't create this chart. This is the official website. The documents we've shown you tonight are not my documents. They weren't created by me or Adrian. They're official documents of the bankruptcy court and the official websites. Those are not my documents. For years, oh no, that's Eric's document. Well, they're not my documents. You can Google and find them yourself. So they put out misinformation. And if you're following or you think you're going to find anything other than the official site, if you go back and look at what they were saying about Sears in 2018, 17, 19, 20, they said there were no valuable businesses other than a bunch of failing retail stores. Die Hard, 200 million. Innovel Solutions sold for $1 billion. We've sold over $1.7 billion in real estate. They said it was worthless. They said all the Sears stores were in the ghetto. All of that has been disproven. It's all been disproven. They said Craftsman by Sears wasn't going to make any money because we sold the whole thing for $900 million. 30, 35 million a year, that's no money. They said nobody was going to use the credit card. Who cares what name is on the credit card as long as they take it at MasterCard and Visa locations? The credit card's still doing 300-something million a year. Kenmore's still very popular. Nobody cares if you can't buy Kenmore in a Sears store. You can buy it in Walmart. You can buy it in Costco. Right. You can buy it in Home Depot. If it's a good brand, nobody cares that you can't get it in a Sears store. They're buying a mock-up of a Birkin bag in Walmart right now. So nobody cares if they can get what they want. They'll buy it online or on a location. So all of that stuff has been disproven, and that's why you see these short sellers and these people that are making up information. Go to the official website. Do not follow the bankruptcy because there's no asset at the bankruptcy. The assets are here. The real estate is here. There's no need to follow the bankruptcy. I literally have said this for 2 years. There's no reason. There's nothing you're going to find there. The official websites are right here. And it's all good news. Just think about how many properties sell for $193 million with no mortgage on it. That's one major property. Anyway, go ahead, Blair.
Yes, I was going to say, I'm going to ask the question of the pink elephant in the room, of course.
Okay.
Everybody's thinking it, but nobody has said it per se.
Go ahead, Blair.
Here goes $1 million question. On a previous call, you mentioned that there might be some kind of unsealed envelope that gets unsealed and it might have a date of some kind. Now, if I'm not mistaken, from what I've heard tonight, that I guess hasn't been the case. So go right ahead.
No, so they sealed part of one of the documents. So so far the SEC is telling us they haven't found it yet. So we had to reapply in 30 days. They get 30 days to look for it. It said they haven't found it. So we sent them another request because we think they just misunderstood the actual request. So when we get that document, if it has a date, if it has any other information we don't already know, we're gonna of course have a meeting and disclose it. But if it has a date or a time frame, that is really, 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 really crucial. And that information could have a timeline like, hey, no later than June 2025, all shareholders and unsecured creditors must be paid. That'd be really great to find. So we're hoping it's something like that.
So to be clear, that has not happened from the last call to this call, correct?
No, but we did hear back from the SEC, and they have not found this exhibit yet. That's right. It hasn't happened yet. So we reached back out to them, and they've got some more. Go ahead, Adrian.
To be clear, we don't know that information is in the exhibit, but it is possible. So I don't want anybody to be like too excited.
That's Adrian's correct. We don't know that. We don't know what's in Exhibit F. We just know that it was sealed. And Exhibit C of Exhibit 10.4. We don't know if it's there. It might not be. It may not. It might just be a list of some of the stuff that I've already went over here. I don't know. We just know they sealed it on December 2018, and it was unsealed officially November 29th of 24 or something like that. So they haven't published it publicly, and if you don't ask for it, they don't publish it. So we're asking for it just to see what's in it.
Absolutely.
But right, great point, Adrian. Because I don't want people emailing Rod, me, Blair. Oh my God, when is it? When is the information coming? When is it? But we don't know because we don't know, and they might say they destroyed it. They could have shredded it. They could have shredded it, and it might not have a date or a timeline on it.
But I did want to add, and I think anybody who's probably still on this call and just like feeling the vibes in the chat today, there's a really special thing. And then I wanted to circle back to how Eric opened with showing how WICO researcher has withdrawn from, he's left the chat, he's gone. And one of the things that I've noticed working for Eric for this past pleasurable time is that he has, similar to Eddie Lampert and similar to people who are in value investing long-term, he has a very unique relationship with time. And he heard him talk before about the temperament that it takes to do value investing, because time will test you. Character is revealed under pressure, and a long time can really feel like a lot of pressure, especially when it's new. So over this amount of time, there's wisdom that comes with experience. And Eric's been on a lot of investments. He reads like so much, you have no idea. And you can gain a lot of experience reading other people's experiences. And so what I've learned over the past couple of years is I've had the opportunity, having the experience with him, seeing him say something today, 18 months later, 24 months later, oh, that happened. So for him to say, look, when somebody's online and they're anonymous, watch, they're going to talk a bunch of stuff, they're going to rile you up, they're going to do this, they're going to take you on a ride, and then they're going to disappear. So for us today to see a week or so ago, WICO researcher, like he's reading out of Eric's playbook, do exactly what he said, I just want us all to kind of like register that in our minds. So when you do, and again, this is not investment advice, this is not a promise, this is another, but when we do get our Sears investments, I just want to reiterate for everyone, do take a moment, take a pause, think about a lot of the things that Eric has said about how to handle your money when it comes, because he does have a lot of foresight. He's not promising anything, it's not investment advice, but he has a lot of wisdom, and it's been really enriching for me to see how what he says does tend to come to pass. And when he says someone like Eddie Lampert has the gift, doing great, I just a lot of weight into his opinion. So I'll let you talk.
Absolutely, Adrian. I couldn't agree with you more. And if I may, I just have a comment that I've been waiting to say all night. I'll go ahead and say it now. This squad right here is phenomenal. Eric was given a list of the very talented people here. And of course, there's Adrian, there's Tbcd, there's Eric, there's Rod. I mean, the squad is phenomenal.
Blair.
And the work that you guys do is just unbelievable. We get to learn. Me and Tammy was talking about this the other night. This is such a mind-blowing education. You know what I mean? And the fact that, and I want to say something too, Eric. A moment ago you said, because I saw that question. Well, you know, if this thing was so great, why did he keep it all to himself? He don't think like you do. That's the whole point. It's like you have people that are in service to self and people that are in service to others. And the in service to others people are like angels. That's what you guys are. You guys are incredible. You're really incredible. You help us understand something that we would never understand ordinarily. You make the complicated digestible. You see, and that kills a lot of stuff. I mean, you know, it builds so much trust. When you like right now, I'm looking at it right here on the screen. You know what I'm trying to say? Like it's to understand what that means, what I'm looking at. You know, it just feels so good to have this accurate confirmation and have it all explained, and it's just incredible to do that. So I really, you guys are irreplaceable. This is perfect. Thank you so much for all that you do.
Thank you, Blair. And
Amen.
I want to say this. Go ahead. Who said that?
I said, amen, Eric.
Okay, that's
amen. Absolutely, James. Amen.
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 Yeah. So, you know, a lot of some of you on here have known me a very long time. James Grace, a long time. Leslie Blair, a long time. Adrian, long time. Part of the challenge is making sure we stay in a bubble. I don't mean we're in denial about any outside information coming in, but we want to be in a bubble about what the facts are. And that is the challenge that's happening with politics with both political parties. Both political parties, I'll just give an example. Both political parties are putting out false information on the other side, and both sides call the other side a liar. But if both of us are putting out false information, none of us has a moral ground. So you can't be in a bubble in a sense that you don't believe that there's anything negative that could come that's untrue. So what I've done since the very beginning is I put out the actual proof from the source. And I've spent 90% of my time disproving misinformation and only 10% proving what's really going on. And it actually isn't a complicated bankruptcy. It's complicated because of the negativity and the time it takes to go disprove something negative. And it's very easy to focus on the wind down of a company. Those of us that are in JCPenney, we know that they're winding down JCPenney. Their bankruptcy ended. They did a payout of $8 billion. How much was it, Adrian? $8 billion. They did an $8 billion payout to some bondholders and some other lenders 3.5 years ago. The bankruptcy is still open. That has nothing to do with the price of tea in China. It's 25-30 million left in that account, and we're in a litigation, among other remedies, to get the money distributed the way it was supposed to. JCPenney was a situation where people embezzled, stole, laundered. This is not what's happening. Eddie Lampert set aside separate accounts with separate trustees, with separate, everything is correct here. That's why you don't see anybody suing or fighting. And by the way, he owned the stock that we own. He owns the bonds that we own. So it's no way for him to pay himself, not pay us. That's what the big thing was. Everybody thought that he was everybody on Wall Street isn't crooked. Warren Buffett is a great guy. He's giving away 95% of his wealth. Eddie Lampert is in that group. It's a small group of them, but he's a legitimate person and he's not ripping us off. And bankruptcies and all types of, and not just bankruptcy. You know, Elon Musk is making a whole lot of money and a whole lot of salary and selling a whole lot of stock and doing a lot of loans. Who knows what happens to Tesla, but he's going to be okay regardless. The guys at Carvana, the car company, they just put some cars in a big machine, call it a vending machine. It's just a regular car lot that's selling loans. They pulled more money out of the company than the company was founded with. So if the company goes to zero, the two founders get 6 or 7 billion and you get zero. That's not what's happening here. Eddie Lampert never sold a share of stock. The stock was $150. It got to a penny. He never sold. That ought to tell you something. He never bailed. He never bailed out. So that is a key point. He owns the same securities we own, and he can't pay himself without paying us. And if he could do it, he wouldn't do it. And I'm just telling you, I know his character. Go ahead, Blair.
Tammy, you have your hand raised. Go right ahead, Tammy.
Yes, I just wanted to piggyback off what Adrian said and what Leslie was saying, as well as what Eric was just sharing with us, is that remember that this Eddie Lampert is following the playbook of Warren Buffett. If we were, we were all, a lot of us were small, or even if you maybe not even been born in the 80s, but I know I was just in grade school. So if he's following the plan play by play, just like when somebody started McDonald's and then they just took the same playbook to be successful, he's doing the exact thing. And Eric has pointed that out the entire process, that if he's following that same playbook, that stock now, what Buffett with Berkshire is what, Leslie, 700,000, what we were talking the other day, 700. I think it's trading for 700 and something thousand. And if you just had owned one of that,
it's 702,765, I think it was.
And I think a couple years when we looked it up, it was at 400,000, which that blew my mind. I think the first time I looked it up, and it was like maybe almost to 500,000. And when Leslie shared it to me the other day when we were speaking, it's already at 700,000. So imagine if we were in the 80s and we had just owned one stock of that, where would we be now? So we're just in that generation of we wish we were there. So 10 years from now, 20 years from now, people are going to look and say, how did I miss that? Where just one stock of Sears may be worth $500,000. And so again, that's why Eric's saying never to sell it, because if you're looking at what Warren Buffett done, all you have to do is you look at what people have done and they're successful, and you follow the same playbook. You don't have to reinvent the wheel. And Warren Buffett has shown us that other value investors, they use the same playbook. And Eric is sharing all of that knowledge to say, you guys, it's not rocket science. We're just doing the same plays that they're doing and being able to build that generational wealth. But it definitely is a master class when you study and you read, and all the things that he suggested that we read about and educate ourselves. It definitely is not rocket science. It makes perfect sense. It's just that we never had this type of education.
Thank you, Tammy.
So thank you for that, Eric. Thank you for everybody that contributes to this group and to, the knowledge that we share and the opportunity. So again, Eric, I take my hats off to you. Adrian, Blair, Rod, everybody who contributes, thank you so much from the bottom of my heart. Speaking, I know on behalf of the group, but I just wanted to share that and piggyback off of what others have said.
Thank you, Tammy. Thank you, Tammy. Okay, go ahead, Blair. Thank you, Tammy.
I put in the chat there that basically I put the link there too. Eric, if I'm not mistaken, for what you was explaining to me, that came out at around $7.
Yeah, Warren Buffett paid $7.50. So let's just round it to
look
70.
at that.
That's 100,000 times his money in a lifetime. Now, let me explain something about this since you have it up really quickly. Put the chart up for all. Go to all, Blair, and show how far back it goes. Let me make an example. Let me just show everybody something.
And he started investing at 50.
It's to the right.
No, $7.50.
Adrian, you see
I got all.
Yeah, there you go.
Okay.
Here, I highlighted it. That's what we're looking at.
Yes.
That's the return since they were public. But he bought in 65. And something I want everybody to realize, when you talk about Bill Gates, you talk about Larry Ellison, you talk about people who built conglomerates, you talk about the Rockefellers, you talk about the Vanderbilts, you talk about real family dynasties. Most of those people built their fortune through some type of monopoly. Where me and James and we're from, it's the Reynolds family with R.J. Reynolds Tobacco. They endowed Wake Forest University, the Duke family, Duke University, the Gray family, Bowman Gray School of Medicine. We're talking about people who had generational wealth from something big. R.J. Reynolds, it was tobacco. The Duke family, tobacco. Rockefeller, steel. Andrew Carnegie, steel. These people generally had monopolies. R.J. Reynolds and Duke had 90% of the tobacco market until the Supreme Court struck down the situation. Go ahead, James.
Yeah, I mean, no, you're doing great.
Okay, thank you. So the difference is this: Warren Buffett built a fortune on publicly available stocks that anybody else could have bought over that time. Berkshire Hathaway is 30 other companies. So what I did is I went and looked at the top 10 investments he ever invested in. I went back and got every lawsuit. I got every financial document. And believe it or not, the SEC is supposed to keep all of these archives. When I start deep diving, I had people at the SEC ask me why I wanted to see certain documents from 73, 74. Just imagine going to the library and you ask for a book and they say, why do you want that book? I knew I was onto something. At one point, they wouldn't give me some of the financials. So I went to Warren Buffett's website and he had all of the financial documents from Berkshire Hathaway, but not the two companies he merged into Berkshire Hathaway that built his fortune. So I found them at a university library and they didn't know what they were. And when I went through those documents, I said, oh, this is why everybody missed it. because it's designed to be missed. Amazon was reporting that they were losing over $1 billion a year at one point. But if you know accounting, like my lady Tanisha and Sandra, who are CPAs and my partner, they were just taking the money and writing it. They were reinvesting it into Amazon Prime and writing it off as a loss. Because the biggest parties like the Sears, the JCPenney, the Walmarts, if they knew the business model Amazon was doing was making a profit 20 years ago, they would have squashed them.
No
So,
doubt.
right? So the greatest investments have to look really bad. So I went and looked up a lawsuit that one of Warren Buffett's friend was in. Warren Buffett said this guy taught him. So everybody knows Warren Buffett was taught by Benjamin Graham. Benjamin Graham was his professor. He taught investing and finance at Columbia University, I don't know, 40, 50 years. He's like a second father. But in Warren Buffett's biography, he said a guy named Gordon Wattles taught him how to do what he's doing. He spent one page on Gordon Wattles, and he mentions Ben Graham 1,000 times. I researched Gordon Wattles. Gordon Wattles was in lawsuits all the way to the Supreme Court. And the main lawsuit he was in was lawsuits on making companies look worthless and buying people out. He was merging and controlling companies without disclosing that he was controlling these companies through ownership. Because back in the 70s and late 60s, you didn't have to disclose 5% ownership. So I got the obscure stuff and I said, oh, people don't even know that Transform is Sears and we own it. It's legal, it's all disclosed, but nobody's looking. You don't have to make Sears look like it's not worth anything. When you say Sears, you think retailer. They closed all their stores. You don't look deeper. When you say Berkshire Hathaway textile mill in 1965, 1970, 1975, you say all the textile mills are closing. You don't look any deeper. You don't look into the other accounts, the other real estate they own, the tax losses they own, the tax credits. So nobody deep dives if you name the holding company after a company you know you're going to close down. It's brilliant. It's very brilliant. And it's not illegal. It's proper. Everything is disclosed. And the rest of the people who are shorting the stock, like with Sears, they'll do all the negative stuff and the you're going to lose your money, you shouldn't invest, and everything is worthless. They won't even look at the actual facts. People are still following the bankruptcy, and our assets have been out of bankruptcy since 2019. One thing Wall Street doesn't like, something that doesn't happen quick, something they don't understand, and something that has declined in price. And then you put that company in bankruptcy, everybody on Wall Street left. Only people left, us, Eddie Lampert, and people who figured it out. And I promise you, our group is probably 15%. I know we're 43, 44% of the bonds because we had to follow paperwork on it. We might be 15% of the equity in stock in Sears Holdings. And imagine one small group being in Berkshire Hathaway that early. And that's the impact we'll be able to have. If you stick with it. Because the people who sold Berkshire Hathaway after it went up 10 times, they're sick now. Because it's up 100,000 times. So you have to have the discipline and the patience to understand that you're a part of something extremely rare for generational wealth. And you can't get caught up in the fluctuations. It's down 5% today or 10. Your cost basis is so low. If it dropped 50%, most of you will probably be up 100 or 200 times your money or more. So anyway, any more questions?
Eric, one quick question, what you just said a moment ago. So the two companies that Warren was hiding, did you find out his involvement in either of those?
Yeah, I won't say he was hiding them. The information just wasn't there. Yeah, I did. It was Diversified Retailing and it was Blue Chip Stamps. And he merged those companies into Berkshire Hathaway. And it just so happens that we've got two other companies sitting out there that happen to be controlled by Eddie Lampert, Lands' End and Seritage. And my guess is
Right.
he's going to merge those two companies the same way.
Bingo. Bing. That's what I was getting at. So he took those two companies that were failing companies and
Or
then
no,
merged them,
excuse me, liquidating,
liquidate,
appearing to fail. The primary
appearing to
business,
fail.
the
Correct.
primary
Correct.
business, the primary business shut down, but what remained was valuable. In blue chip stamps, their
Yes.
primary business shut down because it came out with credit card points. The blue
Right.
chip stamps were these stamps you put in the books. It was like loyalty points. And it was a
Mm-hmm.
gas crisis at the time, so nobody needed stamps at the time. People were lined up.
Mm-hmm.
Well, blue chip stamps had 60 to 70 million in escrow for unredeemed stamps. That money had been there for a decade.
Mm.
So those stamps were thrown away. Give you an example. Starbucks has more than $1 billion in unredeemed gift cards. Back in that day, you had to escrow the money. So the 60-something million that was escrow for 10 years, what person you know with a gift card 10 years old with $1 on it? You can't spend $1 or a $2 gift card. So it was lost. He bought the company for $12 million. It was still making some money, and they picked up $60 or $70 million that they never had to pay out.
Right.
He bought 4 other companies with that $60 million, including Wesco Bank, which is a big bank in Pasadena.
Mm-hmm.
He bought Sears Candy, which is real big out here.
Mm-hmm.
He started buying Geico, and he bought 2 newspapers in Buffalo, which were making a lot of money back then. And to date, those businesses, that $60 million is $40 billion. The $60 million he got for free.
Wow.
And he owes no taxes on the gain.
Wow. Wow.
He owes no taxes on the gain.
Why?
So
wow.
Why?
Yeah, why doesn't he owe taxes on the gain?
Because he didn't sell it.
Oh, right. Mm-hmm.
Yeah. And he got the money for free.
Mm-hmm.
And the money was in an account, almost like an insurance account. So what Eddie Lampert doing is it's identical but better. Because Berkshire Hathaway never got to a penny or a nickel. It was $7.50, and Berkshire Hathaway took, well, people didn't even know who Buffett was until around 1985 because he wasn't doing interviews. Anybody seen Eddie Lampert in an interview?
Not really.
Okay. Anybody can Google a whole bunch of interviews with him talking like Bill Ackman and somebody?
Nope.
No. You just stay quiet and you work. You stay quiet and you work.
Correct.
We're in a position that very few people in history have been in.
Correct.
We caught an absolutely undervalued, incredible investment early. Now the test is, can you hold it?
Correct.
Can you keep it? Can you deal with the fluctuation? And can you grow generational wealth with these people? There's no crowd of people saying I was with Warren Buffett in the only people who got wealthy with Buffett were the people in his group. No outside person got wealthy with Buffett. No outside person got wealthy with Bill Gates. No outside person got wealthy with Zuckerberg and Facebook and Google. Only the inner circle.
Right.
Think about it. You don't see somebody, hey man, I was in Amazon in 99. I put 10,000 in. I'm worth $1 billion. There's nobody.
Correct.
We're the inner circle.
Correct.
We're the inner circle. I'm sorry. Go ahead, Blair.
Yeah, no.
Somebody's hands up.
Motorcycle.
Somebody's
chick.
hands up.
Go ahead, motorcycle chick. What's your question?
Yeah, not a question, was more of a comment. I remember my question earlier was about the payout and how that was going to operate, and everything that was just recently said kind of coincides with what Adrian, I remember, sharing with us. I don't think there was this many people on the line before, but I remember her saying the stocks that we have, that's your goose. You never give away your goose. The goose is going to keep laying golden eggs. So,
that's right.
That's why you don't. And that's why I was asking about the recurring payments and the income that we'll be receiving from the other things that they'll still be getting money from will still come to us by way of the shares. So And so that's why you hold on to those shares and not get rid of them. And you can borrow against it and then use that money from your interest that you get to pay that off. So.
But this is not financial advice. And we
It's
are
not. I'm not a financial advisor. Don't pretend to be one on TV. So yeah.
Just a
But yeah,
group of friends sharing advice. That's all.
Yeah.
Sharing
That's all.
information.
So-
Sharing information.
That's all.
That's all.
So yeah, I just wanted to remind
But
people
you
of that
can
too. The ones that
Google
may not
buy.
be here.
That's right. You can Google buy, borrow, die. Buy, borrow, die.
I just
Stop.
did that yesterday. Yes.
Yeah. All right. Go ahead, Blair. I think somebody's got their hand up.
That would be Robert Evans. Go ahead, Rob. Go ahead. What's your question, sir?
We can't hear you.
Rob?
Can you hear me?
Yeah, we can hear you now. Go ahead, Rob.
Hey, Eric. Hey, guys. How's everybody doing?
Hey, what's up, Rob? We're good. What's up, buddy?
So listen, Eric, you know, you and I have had extensive conversations, and this thing you laid tonight, this egg you laid tonight about how Warren Buffett did it, you really took us on a deep dive because I never heard you tell me that story before. And
Oh, I didn't realize that.
No, that was really intriguing. And the way that Eddie is doing this is just a duplicate. I mean, I can just see that by the way you're describing it. It's just a duplicate. And so I'm very happy to be here. I'm glad everybody's here, and I hope that we all stick together and do the right thing when this all comes through, and support one another. So thanks for having me on. I appreciate it.
No doubt. Thank you, Rob. Thank you, Rob.
Way to go, Rob. Way to go, Rob.
Yeah. So let me say this too, and everybody do your own research. I don't know. I think it was 3 or 4 years ago. I sent out an email on an undervalued stock. If Zalika is on here, she'll tell you guys. I did a value investing class, and I used the stock as a current case study. The stock was trading when we got it and found it was $6.50. It was extremely undervalued. I showed it was undervalued. It took me 30 minutes to understand it was undervalued. Within 3 years, the stock was up 10 times the money. I don't know
what that name is.
It was Mr. Cooper. Mr. Cooper.
Yes, I was just going to say, yeah, Cooper.
It's a mortgage company, right?
Yes.
So KKR, the guys that took over RJ Reynolds and Nabisco, they put this thing together. So long story short, I sent that email out, and I think people thought I was trying to send them a stock tip. I sent them the proof that it was undervalued and say, hey, do your own research. So I contacted a couple of people that were in Sears, were kind of tired of waiting. I said, if I find something incredible or something really good that I see is undervalued, I'll send it to you, but do your own research. I'm buying it. Mr. Cooper is up 15 times the money in 5 years. And I dare you to find someone popular on YouTube, popular on Instagram, popular on Reddit, that's talking about stocks that can show you a 15x, not a stock they put their money in that went up, show you in advance that it's undervalued, and that happened. Now, Mr. Cooper might have took 10 years to reach that point. It was so undervalued, it got discovered. Eventually, all undervalued companies get discovered and all overvalued companies get discovered. It's just like gravity. Just because it's going up does not mean it's going to continue to go up forever. We're not looking for what's going up. We're looking for what has gone down, but has the momentum and the actual weight and the bounce to actually go up. If you throw something heavy in the air and you throw it with a lot of force, it's going to go up. But if it's really heavy, I assure you it's going to come back down. It's going to come back down. So what we look for is actual value on a mathematical basis. And a price of a stock can go anywhere. All the scams went to the moon. Enron was really high. Carvana, Nikola, all scams have to go high or it doesn't work. It's a pump and dump, so to speak. But Warren Buffett did something unprecedented, but he did it with publicly available stocks that anybody else could have invested in. Had they understood they were undervalued and had the patience to hold on. That's the key. Go ahead, Blair. Go ahead, Blair.
I'm sorry. Let's go to RB. No, let's go to Robert. Let's go to RB first.
All right.
R2, what's your question?
All right. No question, but Eric, as you were talking, you're making me, go back. I had to actually go over to the my bookshelf and pull out this book, on Warren Buffett, because you and I talked about this. And just to give everybody some context, when Blair initially, introduced me to Eric, because he kept saying, you need to meet Eric, Eric needs to meet you. I literally stopped everything I was doing. And as soon as Eric, you can verify this, and Black can verify because there was 3 of us on the call. As soon as you said what was taking place with Sears, I said Warren Buffett.
You said Warren Buffett, Berkshire Hathaway. You said it immediately. You're the first person that ever spoke. You said it immediately.
I said it immediately. And the reason why is because it's like the concept that Eric was just talking about, and you can look this up. It's called gift card breakage. It's breakage. It's that portion that's not used, and what companies do is they use it as a float. But let me just read this real quick, just for the group, so they kind of get
Rod.
understanding. This is a book, Warren Buffett by Robert Hagstrom. It's just a small excerpt. It said in the early 70s, Berkshire Hathaway owned a company called Diversified Retailing, which in turn owned a company called Blue Chip Stamps. Charlie, meaning Charlie Munger, via his investment partnership, also owned Blue Chip Stamps. The company provided supermarkets and gasoline stations with trading stamps to give to their customers, who collected them in books that were later exchanged for merchandise. Like an insurance company, the unredeemed stamps were a form of float. This is important, float, which allowed Blue Chip Stamps to purchase other businesses, including a savings and loan, a newspaper, and a partial interest in a candy company, Sears Candy, a West Coast manufacturer and retailer of fine boxed chocolates. Just wanted to read that. Thank you.
Absolutely, Rod. There it is. Absolutely. Robert, you lowered your hand. Or did you still have a question or no?
No, I forgot to put it down.
Okay. All right. Rod, thank you again for that info.